I am here as I should be on Friday night with my co-host, Larry Goldberg, to talk about Good News Friday. Larry, is there any good news out there to talk about today?
Well, Tesla stock didn't go down today.
It hung in there. I think it even finished in the green. Wait a minute, let me be sure of that. Yes, it finished up 62 cents.
Yep.
And it's 23 cents more in the after hours. So that would be one piece of good news, right?
Right.
It also defied Gary Black's 3-day rule. So even though it was only 62 cents, it came back on the second day.
This is a very unusual, end of quarter, very unusual because it's not often that Tesla disappoints.
Yes.
So maybe there's an inverse rule that when it disappoints, it comes back up, quickly. When it doesn't disappoint, when it beats, then it goes down, 3 days. How can you explain it all?
Well, we had I'm sorry, I'm blowing his name. Sawyer Merritt put out a little note yesterday that the average over the last 4 quarters has been about 10.5% down on Thursday after the earnings report. So the 13% yesterday wasn't really that far outside of normal.
Yeah. Yeah, I mean, the earnings disappointed the analysts, but some of us found gold in the earnings report. I certainly did. I thought that, while it's true the company's in a hiatus between waves, and I think that Elon characterized that extremely well. I've been saying this for almost a year now, that it's really a pity that we actually missed the launch of the next gen, which really should have come a year ago. But I guess their hands were full. And we missed that, and I think we've lived through this hiatus, and I think Tesla's handled the hiatus very well by expanding the TAM of the Y and the 3 to an extent by reducing its price point to a very competitive level with the luxury cars or the non-performance cars. And so I think that's the way they've dealt with it, and what they've done to maintain their margins, which at 17% is industry beating, barn burner, any other company would kill the firstborn to get there.
Right, right.
And everybody's disappointed because it's not 27%. Well, 27% was, fantastic for the first years because EVs were so different. Now they have to compete head on with cars in their price range, and they're doing a damn good job of it. And so we're in a hiatus, and the stock price reflects that, and the stock, earnings per share and all the rest reflect that. And so I think we've been through this before. We went through this in 1915 to 1919, or actually to 1918, really. We picked up in 18 very well. So yeah, 1914 to 17, my memory for those dates are not that good, but there was a really bad period, and a lot of people lost their boots because they'd gone long, on options, and those options just expired worthless. And so we've been through this before, and so we're going through it again. Look, Elon is a very, very cautious guy. He stepped gingerly through this pandemic, and he just executed extremely well on what they had going. He held back a long time on, he's holding back on Giga Mexico just as an example.
Yeah.
And so we are where we are, but the story remains solid, and the cars that they have on the market are doing an amazing job. And, that's all I can say.
Okay, so I had Jeff Lutz on my show earlier today. It was an amazing, amazing time. Anybody that's missed that needs to go back and take a look. He said, last year, of course, we had this 9% reduction in cost of goods. Now, some would say, well, it was a little easy because we were coming off this high inflation and coming down. But Jeff Lutz says he thinks they can do 8 to 10% additional cost of goods reduction in 2024. The same as 2023. And he went into detail. We went through piece by piece of 4 different categories where there could, like the battery and additional raw materials and the electronics. And we went through all these different places where these cuts could come from. If that happens, we're talking about they could drop the price of the car another 8% and keep the margins, or
Absolutely. Absolutely. When Jeff talks, I listen.
okay.
Jeff is the GOAT. I mean, when it comes to cost of goods sold and supply chain, this guy really knows his stuff. He is the real deal. And, I have the highest regard. So when he tells me there's another 8-9%, I have to agree. There is. I mean, I did the numbers, I came out 1 cent short
Yeah.
of where we ended. But the one thing I got right was the cost of goods sold, because I listened to him very carefully.
Right. Okay. So then last night I had Brad Ferguson on my show, and we talked about that there's a pretty good chance, I would say more than, I don't know, maybe an 80-90% chance of a $2 to $3 billion increase in profits this year just from energy storage, which is his specialization.
Yeah, I agree with that. None of us have visibility into the contractual, payments and what is outstanding. I wanted to do that exercise, and I am going to do that exercise just to see if I can somehow get a sense of, what remains contractually, what they have done, and so on and so forth. I wish they would give us a better insight into the
bookkeeping.
A, the pipeline, and B, the contracts, and C, what remains, and so on and so forth, because I have to think that they're holding quite a lot back in reserve, or at least their contracts are not paying. So paying, in full until they get, connected to the grid, for example, and those grid connections, those installations that are on the grid side, take a heck of a long time for the interconnect, and I don't think they're going to get paid in full until interconnect's done. So I'm trying to find those numbers in their accounts receivable.
Right.
So yeah, I mean, it would be really nice to get those numbers.
All right. And then the next one is that the 4680 ramp should provide about another $2 billion in cost of goods savings because of the IRA. So
Are we sure that that number is not one that, that Master Lutz has got in his head? So I don't want to double.
No, this is different. This is a separate item. We talked about that. We talked about the IRA money being separate from his 8 to 10%.
Okay. As long as the IRA, yeah. So I mean, the more 4680s, the better.
Right.
More better.
More better.
Because we get not only the value of the 4680s and the product that it supports, but we get the supplement from the IRA, and we get the savings. So I mean, it's like a triple whammy.
Right.
Yeah.
Right. So then we have your favorite category, which is services, because it includes the superchargers. And we went from negative, as you pointed out the other day, we went from negative $500 million to positive $500 million. I'm guessing that we should add at least another 500 million in profits this year, wouldn't you say?
I would be certain of 500 million.
Okay.
Now, whether it's more than 500 million or not, I don't know, but I'm pretty certain of 500 million. Just, from the increase in the throughput on the superchargers, the services profits. Whether they'll release any warranty reserve or not is an open question. It's very conservative accounting, and so maybe they won't release anything again, but they're doing great on every front on the services side.
All right. And then, Larry, there's also just the small matter. I mean, even the worst estimates for next year suggest that auto sales will grow 13 to 17%. That would be the range of the worst estimates, including Troy Teslike, who's probably the lowest. So since we've already talked about the margins, we've already talked about the IRA money, we've already got that aside. All I want to talk about is equal margins for the year. That 13-14% increase would give us about a $2 billion increase in earnings before overhead. Yeah. So when you start adding all this up, it comes to $9 billion.
That sounds a lot to me.
I know, but you see,
you've done the numbers already?
Yeah, 2,500,000,000. We just talked about the 500 million, a couple of $1 billion from IRA money, and then a couple of $1 billion from energy. You add it all up, and we're talking about 8, 9, 10, who knows, $1 billion. And we only did 11 billion in profit this last year. It sounds like a Randy Kirk crazy thing, but I didn't. It
sounds crazy enough to make me want to do the numbers myself, check that out, because that sounds high.
As soon as you do them, Larry, come on back and let's have we'll have a longer conversation about it.
Yeah. Now, you do realize that there is going to be a fair increase in R&D next year.
Yeah.
So that R&D hits the income statement directly. Most auto companies subsume the R&D into their capital investment and then write it off over 5 years. Tesla doesn't. Tesla writes it off when the time it's incurred, which actually impacts their profitability quite significantly compared to other auto companies. Mm-hmm. So you must write against that 9 or 10 million, whatever it is, if you're
billion, yeah.
9 billion. You have to write off that extra 2 billion of R&D.
Okay, Larry. All right. I'll take my 7 billion on top of the 11. On top of the 11 from this year, nobody's thinking that Tesla is going to have 18 billion in profits next year. Nobody's got that number. Anyway, but I'd love to have you do the numbers. I'm going to do them in more detail. We can compare notes later. All right. Then another piece of good news. This is my seventh piece of good news. Chris Camillo was back on Herbert today. He was on Herbert Spaces.
Chris is the best retail investor that I have met. Okay. He's extraordinary. What makes Chris so good? Let me tell you what makes Chris good. Okay. That he is fearless, which can be also bad, but he is fearless. I mean, he's the opposite to me. He's fearless, but he's incredibly inventive. He will find trades that nobody else finds. He uses this unique ability to sniff them out through public, through media, through, what he calls social media. So he does this, he senses what's happening in the zeitgeist by looking at public media and saying, this is something that's happening and it will impact this company.
Yeah, right.
And he'll do these short-term trades and, with the courage of a lion.
And he says he's averaged 60% a year over, I guess, the last 5 years or something like that.
Well, no, much longer.
Much longer.
Oh, yeah. The guy's been going for some time because he wrote a book that I read. It's, it feels like 10 years ago. So he's been around a long time, and I've been following him a very long time. He is extraordinary. Anyway, sorry, I interrupt.
Oh, that's fine. That was good news. That was good information to have. Well, So I got from the meeting to the Spaces Today and from the call, Elon Musk, I believe it was Elon himself, said, Optimus is already capable of doing useful tasks, but they're very specific. So I'm imagining, starting a coffee maker. Okay. I can teach the bot to push a coffee maker. And then he says, but we're not interested in that. He didn't say those words. He said, we're looking for a much more general application. Then in the call today with Chris, again, it was more of an implication. I was trying to read between the lines a little bit, but it sounded to me like he thought some of these other companies might grab onto those more specific applications where they would go out and start putting out 100 bots or so into some of these specific opportunities in order to train their bots that way and to become more knowledgeable about what's going on out there. And to me, as a guy who's, product man, who's put a lot of product out in my lifetime, those sounded like two very different but smart ways to approach the market. What do you think?
I'd like to listen to him because I'm not sure I'm aligned with what you're saying. Tesla's bot is in the very early days of understanding the world. And the understanding that it has of the world is that it can navigate the world quite well. The tasks that it can do, and they're very limited because we had this interchange between Drew and Elon. But in that interchange, I could understand very clearly that Drew was saying, not much. And Elon was saying, well, a little. In other words, it can fold a t-shirt. It's not a use case that, I think is that valuable. But
Unless you own a t-shirt printing shop where you're printing.
I know you're going to give me the t-shirt printing shop. But I've seen it fold this t-shirt and it's not great. It's not, you'd get a lot of very skewed prints out of that bot. I think what he's saying is that the Tesla bot is going to be will be able to understand the world a lot better.
No.
If you listen to Brett
Adcock
of Figure, the guy who was a little angry with me, if you listen to him, he thinks that he's also aced that particular concept of the bot being able to understand the world more in terms of being able to watch somebody do something than emulate that to do something. These are very early days. We've had this conversation and we disagree. These are very early days, and I think what you said is a leap of faith. I have the faith that they'll do some very good work. I also have the conviction that it's going to take some time.
Right. Well, now that's something that everybody's agreeing with you on, Larry, except me. So no, I think it'll take time. I just don't. One of the things that keeps getting asked, and it was asked again today, doesn't it make sense to build 1,000 bots? And Chris said absolutely that it makes sense to build 1,000 bots and put them out there to start, even if all they're doing is walking around, running around, shaking hands, slapping hands, whatever, and doing some useful tasks and trying to learn how to operate.
Doing that's going to soak up all your manpower.
Hire more.
Those people are not, you don't find them in the street. That manpower is under such pressure. Look, just to put it to you simply, Figure have got, I don't know, something like 70 to 100 people working there.
Right.
I hesitate to say the number because Brett's going to attack me again.
Brett said 7. He said 70 engineers.
Yeah. I use the figure 50 because that's the figure that was in LinkedIn. And then it had like 70 people associated or connected to the company in LinkedIn. And I use the 50 because that's the number claimed by the company.
I see.
And Brett told me, I don't know what I'm doing. I'm not doing proper research, but okay, 70, it doesn't matter.
Right.
Tesla have 260.
Right.
Now, you don't advertise and you get 1,000 applications, or you get 1,000 applications, but only one of those 1,000 have got the experience necessary. This is really, really, really difficult to find the people, and the people are in very, very high demand. Very high demand. So it's easy to say, well, just hire them, but if it were useful to build 1,000 bots, Tesla would have done it.
That's my point. Exactly. Now, so we see we agree. So we should stop.
And they haven't done it.
Well, you don't know.
No, we know. They've got a handful of bots. If they had 1,000 bots, trust me, we would have seen them. We would know about them. That kind of word leaks those walls. They haven't got 1,000 bots.
All right. So I want to go to another subject here. Chris Camillo also said, I thought this was very interesting, going back to what we were talking about as Chris as an investor. He says retail stock owners have a tremendous advantage over the majors, the investment companies and whatnot, contrary to the myth that these guys will always be able to beat the retail investors. But the key is knowledge. It's an understanding of the stock. It's the ability to zero in, which we do on this channel on Tesla. It's the ability to spend a lot of time. And I think a lot of retail investors don't get that. They think they can put in an hour here and an hour there and then beat the market. It takes hours and hours. Now,
Yeah.
Brett says he follows, I think, 120 companies, but you've been doing this a long time. You're invested in several companies, and you're also doing VC investing. What do you think? How many hours should I know it's impossible to say, but what do you think is reasonable for somebody to spend right now in terms of weekly amount of research on a company like Tesla in order to have a shot at being able to beat the street?
Look, I invest in a few companies at a time, not a lot of companies at a time, because I prefer to do my own research.
Yeah.
And my research consists of reading a heck of a lot about the company, from the naysayers and the yaysayers. And then doing, as you say, I just read a lot of 10Qs and a lot of 10Ks, a lot. And I learn from them. And then I have some friends who give me ideas, tell me and every friend's idea I research. I listen to people like Chris. I listen to people like yourself. I listen to the podcasts. I listen to Herbert's podcast. I used to listen to Rob Mauer a lot on Tesla, and I read a lot about the companies I'm interested in, and I look at Motley Fool for ideas. So the resources on the web, it's just amazing for the retail investor, just amazing. So for ideas, I go to guys like Chris, I go to Motley Fool, I listen to yourself, Herbert, for research on specific companies, I go to certain people like Rob on Tesla, X, or I follow all the majors,
Right.
Definitely Holmar's blog without question. And then I'm a member of quite a few groups that are very interested, and one group is Rebellionaires, that's Brad's group.
Right.
But I couldn't agree with Chris more. I couldn't agree with you more. You just got to do the work. Now, how much work? It depends.
Yeah.
So a company like Tesla needs a lot of work because there is so much negative press about them. But the negative press is very interesting because it does lead to controversy, and that controversy does drive out a lot of truth.
Right.
So there's a lot of value in that negative press for me.
Mhm.
And I do read the bears and I soon learn who are ridiculous,
Right. Yes.
and I learn who are making really good points. And then there are some Tesla bulls who are very, very critical, and the analysis is pretty darn good. I'm thinking of James Catt, Aloda. I mean, then there are guys who do, the detail. James, he does this incredible, detail with these 69 spreadsheets. By the way, spreadsheets are bloody good. Because in the detail, you can find answers to questions that you have. For example, the tax question, or just as one example. Anyway, long answer to your question, couldn't agree more. The retail shareholder has got so much on their side. I mean, I've outperformed my colleagues, my friends, private, their advisors by far, in my investments. But I don't expose myself to the market as much as my colleagues are exposed to the market by their investors.
Yeah.
I'm a little bit more conservative than that.
Right. All right. Number 7 in the good news list today was that the PCE came in on target, or even a little bit better.
Yeah.
Bonds sold off on the news. Here's what the Wall Street Journal had to say. It said, Fed policymakers can be fairly confident that inflation is back down around their 2% target. Moreover, they view their current target on overnight rates at a range of 5.2 to 5.5 as, in the words of Fed Chairman Jerome Powell following the central bank's December meeting, well into restrictive territory, meaning the tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely has not been felt yet. They go on to say they think the Fed will still want to see some further loosening in the jobs market before making the move. Larry, I know how you feel about this, but I thought I'd let you rant anyway. I mean, they should cut next week. They've got everything. They've got everything they asked for.
Well, can you see the screen?
I do.
And what does it tell us?
Yeah, no kidding. We've already
I mean,
passed.
whether you believe truthflation or not, and Jerome Powell has referenced them,
Yes.
but whether you believe it or not, if you look at this graph, you'll see that inflation has fallen from 6.5 on their relative scale. In other words, you don't have to take this absolute scale, but if you just look at what they're measuring in relative terms, and they're very transparent, they show you what they're measuring.
Exactly.
It's fallen from 6.5 1 year ago down to 1.8. I can't remember. I just honestly can't remember a time when inflation has ever fallen that quickly.
Oh, it never has, Larry. No, this is a record. This is a record.
And so when you have inflation falling at that rate, you have to ask yourself, what is the brake that stops it? Why have the Fed not asked that question?
We keep hearing about the last 2% being so hard, but nobody ever tells us why they think that's true. I can't figure out why that last 2% should be so hard.
Well, the other thing that we do know, or that is common, that is the consensus, the economist consensus, is that if you get below 2%, you're in dangerous territory.
Yes.
Because the only thing that's worse than inflation is deflation. And the Federal Reserve, have got this absolute commitment to avoid deflation at any cost.
Right.
Now, when you get this kind of situation where, all right, for the last 6 months, it's been, relatively slow downhill, and the first big downhill jaunt was to 2%, by June, July. So I will give them that. But look at the last month.
Yeah.
Last month, it's gone from 3% to 2%, in the last 2 months. At this rate of decline, we're in danger territory.
There's no doubt about it. So it is confounding to me why we are not, seeing some kind of evidence. Well, I guess they're in their no speaking phase. They're not, they don't say anything prior to the meeting, but anyway, I thought you would have some feelings about that. I just.
Was that a sufficient rant? Did that satisfy?
Yes, yes. Okay, we've got Dan Ives. Will we agree that Dan is a pretty smart guy?
Dan is bitterly disappointed that
Very disappointed.
that the team did not perform to expectation, not his expectation, but the analyst's expectation that they get guidance.
Yes, yes.
And, you know, with this new CFO being so new and so unblooded, I think Elon got his way to end this whole guidance thing because Elon just doesn't want any guidance. And I think that's the general consensus. So,
not the only company. Lots of companies don't give guidance.
well, Elon's ripped the band-aid off. He's just ripped the band-aid off and said that's the end of guidance. And the market is sorry, not the market, but the investment managers, the PMs, the portfolio managers are having a fit.
Right, right.
And they're registering their disdain. And, you know, I think the volume yesterday was right off the charts. At one point at 2 o'clock in the afternoon, it was like at 180 million already. So I don't know where it ended, but it was high.
Yeah, and a lot of people actually are saying that the numbers weren't that bad in the report. It was basically just the guidance. But what I'd like to do here is that Dan Ives put out a note today. He gave 10 things that he thinks Tesla needs to do to get back in the good graces of the financial community. He didn't say these are 10 things that are going to help the company foundationally or fundamentally. So let's take a quick look at these, Larry. He says, first of all, they ought to announce a $10 billion share back. Since they have 30 billion in cash, why not do it? Just, he says, walk the walk, not just talk the talk, and show confidence to investors. I know that you don't think this is a good idea, but go ahead anyway.
If you want to rant from me, just consider me ranted already. You know, they're not going to do it and they shouldn't do it. It's as simple as that. They're not going to do it and they shouldn't do it, and Dan should know better.
Okay, there you go.
They have plans for every dollar in that 30 million. We're going up by 10, we're going up by $2 million in the R&D.
$2 billion.
$2 billion in our R&D alone for next year. We've got, it's crazy, just crazy to think we do share buybacks in the middle of this thing. Elon Musk is not Tim Cook. Get over it.
Number two, he thinks that they should create an X holding structure that will include AI initiatives like Dojo, Optimus, and FSD, so that Musk can have more control and could get his 25% voting level.
Somewhere we need to put Elon in control of this company. We are all at risk. Dan is right. We, the retail shareholders and the institutional shareholders, are at risk if Elon's control of this company is at risk. Look, if Elon were not if Tim Cook were in control of this company, we would be at about the $120 share price. No, I mean,
I know,
because we'd be on the same product. We'd have the products that are on now, that would be what we would be selling, and we'd keep selling them, and we do well selling them, and we return $6 or $8 a year to our shareholders.
And there's nothing with that. And there's
so he's absolutely correct. We should do whatever it takes to give Elon the 25% that we need him to have.
Yes.
To control this company. He's right on target. Now, the fact that he himself did himself out of the 25%, okay, that's a conversation, it's done. So nothing's going to change that. We need to fix this problem.
His number 3 point is stop the price cuts now and maintain margin leverage over other auto players.
Margin leverage is there for a purpose. There's a strategic value to margin leverage. One of the strategic values of margin leverage is that you can drop your price with impunity. And this is the time that they have to use that aspect of margin leverage. Not to increase profits, because profits are going to increase once the next wave comes. That there's no question about. None in my mind at all. But what they have to do is keep the initiative. They're growing. They're growing despite the fact that they only have, just repeat the speeches from the last 5 broadcasts. I mean,
By the way, Larry, I'm going to interject right here because I brought this up the other day. I can't remember who it was. It certainly wasn't you. I've been a salesman. Did we talk about this sales manager problem?
you absolutely did talk about it.
Oh, we did. Then you've already answered that. Never mind. Let's go on to number 5. All right. He says they should get outside capital for X and Twitter with assurances of no more Musk stock sales. I think actually today there's news that there is a $6 billion offering floating around out there for X.
For XAI.
XAI, yeah. I'm sorry, XAI. Yes, correct.
Yeah.
So what do you think about his suggestion that they raise capital over there so that everybody be comfortable that there's not going to happen again over at
XAI is a different company to X.
Right.
Do not confuse the two. If you raise money for XAI, it doesn't solve Twitter's problem. It doesn't solve X's problem. XAI and X are different. Look, X is in, under financial stress.
Twitter, you mean? X, Twitter.
X is under financial pressure and will continue being under financial pressure. I think it's going to do very well. I'm betting on X. And it's a different thing to XAI. How Elon gives comfort to the market that he's not going to sell more shares in order to fund X. It's the banker's problem more than it's Elon's problem.
Banker's problem, for sure. So I think you answered this on Wednesday, Larry, but his next one is they should hold an AI day before the summer timeframe so investors can better understand the goals for Dojo, Optimus, and FSD. And Elon was like, oh, hold an AI day? Well, I don't know. I'm afraid my competitors might take advantage of it. Do you think they should hold an AI day? I want it for me because I'm curious and I want to know. But what do you think the company should do from the standpoint of the best long-term decision?
Well, we retail shareholders have built castles in the sky around the AI, around the bot, around Dojo. And so it would be good to get very clear, focused plans or strategies. I loved Investor Day. Investor Day last year was one of the most revealing hours that I've ever spent on my Tesla journey. I would love them to do something similar and focus on the AI, because the Tesla Battery Day was really focused on, the next plan, the plan for the next phase, and covered everything. So I'd love to see that. I don't think it'll help the investors. I don't think it'll do anything for the stock price. Every time they've gone to the public with their plans, the stock's tanked. Because honestly, investors just don't get it. They just don't get it. I mean,
right.
Gary Black is a punter for the stock, and yet,
Yeah.
he was very critical of Investor Day. I mean, he said, oh, they didn't do this and they didn't do that. So forget about the institutional investors. And I think if Dan Ives thinks the institutional investors will find this, comforting, they won't. They really won't. It'll be above them. It'll be over their heads, and except for a few. I mean, we could name them on one hand. And those guys get it anyway. But like us, they're thirsty to hear more detail and get, fill flesh out the information so that they can take their castles in the sky down and build on a better foundation. So I don't think it'll do anything for the stock price. So if anything, it'll be negative.
So he also suggests that we need that new comp package when the Delaware folks get things cleared up, that we need a new comp package. And I have to say that Elon doesn't need another dollar. He doesn't need another share of stock other than for stock advantage, but he's also a game player. He loves to play his video games. And I'm that guy too. I don't play video games, but I love what I'm doing now. Part of what I love about my YouTube channel is watching my daily stats and seeing how many people are subscribing and how many people are watching. And yeah, I'm all about that daily. That's my daily fun, if you will. And I think Elon wants that same kind of fun. He needs those targets. He needs those things to hit. What do you think?
I agree with you. And I will say one other thing, because I always say one other thing. Honestly, I think we need the comp package so that we can understand what his targets are. The targets that go into that comp plan are his targets.
Yes.
And if you paid attention to that first comp plan, you would have made a fortune of money, right?
Yes. Yes.
Because he laid out exactly what he wanted to achieve. Everybody said, he'll never achieve. It's not possible, blah, blah, blah. And he aced it well in advance. So all I'm saying is that if he agrees a comp plan with the board, then the board have agreed because it's so high and it's such a big reach, and he's agreed because that's really what his target is. And for us, it's more revealing than an investor day.
So I'm going to skip two of them because I already know that everybody on the channel would just agree with you and me on those. So I'm going to skip down to number 9. He says, and this is one that I think is maybe the stupidest on the list. It might beat the $10,000 share back. $10 billion share back. He says, number 9, do aggressive AI acquisition spree and bring in outside capital to build out the AI components of Tesla. $30 billion of cash to fund deals. So does he want to do a $10 billion share back, or does he want to go on an acquisition spree? And does he not think that Elon has his nose to the ground all of the time, totally trying to sniff out any acquisition that would benefit Tesla? And doesn't he think that every small company in the world is hoping to be that target and is making themselves as available and as interesting to Tesla as they could possibly do?
You're right on, buddy. You're right on. Listen, this is a laundry list. I love Dan Ives. He's one of my heroes. I think he has some of the most colorful, commentary in the world, and most colorful dress in the world. He's a great, upstanding guy. But this is a laundry list of an attempt to goose the stock price. On the one hand, you want to give capital away. On the other hand, you want to invest $30 billion. Forget about the fact that you have a commitment for almost $45 billion in the pipeline and on your business plan.
Right.
This is a crazy idea. Give away $10 billion and then, buy a company for $30 billion. Yeah, you could buy it with stock for 30, but then you've got to feed it with capital to do whatever it is to do. It's not a great idea. Elon's capable of inventing not just Elon, the team is capable of inventing in their head whatever startups are doing and doing it better. And they've been doing it. Look, 2 years ago, the bot didn't exist in nobody's mind. It came as a shock. And investors immediately marked the company down. He didn't go and buy a company. No, I don't think it's a great idea. Look, unless, Sam Altman came to him and said, let's do a deal. I don't think a deal's going to be doable.
Well, he does little deals, so he'll do a little deal.
Yeah. But he buys a team here and there. That's a good deal. He buys a little piece of technology here and he buys a little team there. And those deals are going to go on all the time. Right.
Well, Larry, next week the Fed meets. What do you think they're going to do? I don't think they're going to drop the interest rate by 25 basis points. Do you think we will see anything in the language that will tell us more than we already know next week? Well, not the language, it will be the speech after. That's right. The speech after, not the language.
The 210s have been the 210 gap. I mean, the inversion is getting close to
Closer. Yep.
zero. It could be that that notwithstanding what the market says, sorry, what people are saying, I think the market may be telling us that actually, even despite the fact he has forsworn doing it, he may do it. The Fed may do it. I mean, it wouldn't shock me if they did. It would be a very pleasant surprise. However, this is real world, and probably he was not going to do that. I think he's going to try and double speak his way through the day.
Okay.
On the one hand, this, and on the other, that, and the other hand, this, and yet another hand. I've got 7, 8 hands. How many hands do you need? You know, this, that, and the other. You know, we're back to what was the guy? Green.
Oh, earlier in the thing.
No, our Federal Reserve guy who always used to talk in double speak.
Oh, before.
Oh man.
Greenspan? No, not Greenspan.
Greenspan, yeah. Greenspan.
Yeah, Greenspan.
He used to speak in 5 different mixed metaphors and nobody knew what he was saying, which was the ideal solution, you know, for a Federal Reserve governor.
Well, it should be an interesting week with that as part of what we're going to see, as well as seeing what the market does the week after the Tesla earnings call. So, Larry, as always, by the way, the Tesla stock in the after hours is still up. So that would tend to tell us that we might be up on Monday. We'll see what happens. And of course, for you, I know you'd rather it would go down another 15 or 17 points so you could grab some more at 250, but well, that could happen too. It could happen the following week with the way things are. But as always, thank you for coming on and co-hosting Good News Friday, and glad we could find some.
Yeah, there are some good news. There are some good news, no doubt about it.
All right, Larry, thank you so much. And to all of you out there, it's been great talking to you.